You are listening to the ESG and Coffee Podcast on investing, strategy, and sustainability, hosted by Graham Sinclair.
Readjusting some of the offerings to actually reclassify funds towards Article 8 in the first instance, because there's obviously a staggered approach to move from 6 to 8, that the volumes and the assets under management in alignment with ESG are going to increase significantly. And that's exactly the ambition that I highlighted towards 2023, which also underpins our commitment towards the PRI and being a PRI signatory, because there's a mandatory requirement by that time frame to actually have more than 50% of your assets aligned and integrated, aligned with and or integrated in regards to ESG. What does that mean if we're going towards now building temperature of portfolio trajectories towards net zero carbon commitments, which we haven't yet signed because we felt that this is far too early and too many commitments are being made without actually underpinning them through actions and by actions.
Yeah, by many people in the industry, actually.
Interesting, exactly. And this is why, to be honest, we have been shying away from providing information we do not consistently have and can stand for. But ultimately, yes, carbon pricing, if and where this data is available. And again, maybe there's a challenge as well for us, Graham, and that's a very relevant challenge. In our portfolios, especially equity, we cover a lot of SME companies. And their sort of disclosure trajectories and disclosure information generally is very scarce.
Well, it's my pleasure to welcome to the ESG and Coffee Podcast Martina Mcpherson, Head of ESG Strategy and Global Management Committee member at ODDO BHF Asset Management. In this Season 1, Episode 10, we get to meet another one of the originals. Martina's bio reads, quote, at MN_Macpherson on Twitter, board member and senior expert in ESG and sustainable investing for integrated financial and social outcomes. All views are my own, unquote. Seems the legal and compliance department got a hold of her there, and yeah, that's coming for me too. On LinkedIn, there's more detail. She describes her long-term track record in sustainable investing, being recognized as a strategic influencer for her ESG strategy, product and research work in industry and academia, references her time at Moody's, MSCI ESG, S&P Global, Lloyd's, Deutsche Bank, and F&C Asset Management. Martina is a visiting fellow at the Henry Business School and a guest lecturer at the University of Zurich. What I hope you appreciate in listening to Martina is how open-minded she is. We first met in the mid-2000s, probably while I was leading the Principles for Responsible Investment Emerging Markets project from the UN Environment Programme Finance Initiative in Geneva, Switzerland. I've always noted at least two attributes of Martina. One, her collaborative approach working across silos and logos in whatever initiative she was working in. And two, a curiosity and energy to move the ball forward, pressing at the edges of what needs to happen next. I really hope you enjoy this interview. As always, a reminder, this is not investment advice. This is a conversation between peers in the field to expand and understand how ESG and investment works at this time. So please enjoy the interview with Martina Mcpherson. Well, it's my pleasure to have on the podcast today Martina Mcpherson, and I'm really looking forward to interviewing her on this episode of Season 1, The Originals. Martina Mcpherson is Head of ESG Strategy and what does GMC stand for?
Global Management Committee, or General Management Committee, I should say.
General Management Committee member at ODDO Asset Management. She's also the president of the Network for Sustainable Financial Markets, Next Gen, and a visiting fellow at Henley Business School. You can find her on Twitter at MN_Macpherson, where she describes herself, quote, board member and senior expert in ESG and sustainable investing for integrated financial and social outcomes. All views are my own, unquote. And of course, you can find her on LinkedIn. Please, will you all check the show notes where I'll put all the links and other observations from the episode, and a caveat, as always, with the ESG and Coffee podcast. This podcast is not marketing or selling investments. It's just here to explain the ESG architecture. I'm so excited to have with me today Martina Mcpherson. Hello, Martina. How are you today?
Hi, Graham. Great to be connected again and delighted to be on the podcast. I'm very well. Thank you.
Excellent. Where in the world are you today?
I'm in lockdown London. Again, we apparently had Freedom Day, whatever that means. Numbers are up. People are confused about the various type of directions related to diverging policies. But at least it's fair to say, from what we have seen since last year, from a perspective of freedom of movement outside of your homes and travel within the UK, we seem to be okay.
Okay, and your family and friends, how's everyone kind of making it through the pandemic?
Yeah, it's a very good question. I mean, it very much depends, of course, where you are. I've got family in Germany. My brother is in Czech Republic, and friends everywhere else here in Europe and in the world. And fortunately, they're all fine. But it's very interesting to see who's able to travel and where, and to see how we are now moving forward collaboratively and collectively on all of these different type of restrictions and further limitations that might come.
I want to pick up on the COVID in a little bit later in our interview as well for some of the impacts on the investment business. So if we're at your local cafe or coffee shop, I'm not sure what's around the corner from you, but where you prefer to go, what drink would I be ordering for you?
Depends on the time of the day. Usually a decaf latte. I can't have too much excitement with obviously full-on coffee. And maybe after 6 or 7 p.m., depending on the day of the week as well, it will be an Aperol Spritz.
Ah, delightful. So a quick curiosity question. When I checked out your Twitter, I found a tweet that was pinned from 2019. And, you know, people choose to pin whatever they prefer. Why was that tweet special to you? Or why do you keep that pin to your profile?
That pin is about the newly up and coming Routledge Handbook on Biodiversity and the related efforts on the work that Professor Jill Atkins and myself have been doing over the years, spending a lot of time and actually engaging with companies, with other investors, building momentum now even with coalitions in this space, supporting biodiversity and natural habitat preservation efforts. So this is very dear to me, very important as one of the key themes and topics. And I'm sure we will touch on it a bit later on again. Excellent.
Yeah, we'll talk about the business of bees. Right, let's move on to looking at the big picture. I'd like to pick up on the topic of the tragedy of the horizons, that famous speech from Mark Carney in 2015 at Lloyd's of London. Sir David Attenborough has done great work over many years. I'm a big fan. He's got his Netflix documentary called Our Planet, where he references 2 key data points. I ask each of my guests to respond on 3 different data points. So I'm gonna reference it, ask you for your answer, and then compare to where things are today. So first of all, world population. In the year that you first started working, became a professional, what is the world population?
We made the assumptions it was 6.3 billion people in 2001.
And the S&P 500, what level was it at?
Around 1,854 companies.
Wow. And the carbon dioxide in parts per million?
We estimated around 363.
Wow. So for reference, today we're just under 8 billion humans on the planet. The S&P 500 is over 4,200. And the CO2 equivalent measured in Hawaii is around 418 parts per million. You can see even in 2 decades what a change has come. How does it make you feel to think back on where those numbers were and how they are today?
Obviously, quite significant trajectories, upwards trajectories for all of these, and obviously more to come. We're estimating our population to be 9 billion over the next decade plus to come, right? So this is actually not far away. Thinking about, the type of level of companies, but also more from the type of the way they're now engaging with ESG. Graham. They've come a long way. We did research when I was at Moody's, looking specifically at companies reporting in line with GRI, in line with TCFD, in line with SASB, and there's a strong upward trajectory, especially over the last few years. And it's interesting to see and compare notes here that these are companies S&P 500, mostly clearly denominated and headquartered US. So it's interesting maybe also to compare these numbers with others, you know, MSCI World PRI, for instance, including also emerging market companies. But then, you know, the last trajectory, quite shocking, of course, in regards to GHG emissions and where we are going with this generally. So yeah, it's not a surprise. It confirms a lot of assumptions, but it also makes me feel quite uneasy if we look at the next generation and where this is going to go.
I think these data points are critically important, and that's why I'm a fan of things like the Bloomberg carbon clock, the carbon counter. I remember growing up in South Africa, on every news bulletin when I was old enough to kind of figure out what was going on, is they always had the gold price that was significant to the South African economy, and they always had the forex rates, rand, dollar, maybe. Rand, pound, and so on. This is before the euro. And so it's so important to have these data points up front. That's why I like to begin the podcast with that too. Well, let's move to another favorite part of the podcast for me, which is the espresso shot questions. We've got 4 sets of these. These are ways for people to learn more about the human that you are making ESG happen. So you ready for espresso shot question set 1?
Shoot out.
All right, absolutely. Here we go. What is your earliest memory of investing?
Probably childhood. Thinking through, listening to my parents of what investing, financial decisions, financial advisory means.
And what is your philosophy of investing in 1 sentence?
Literally supporting, influencing, and impacting the future outcomes of the decisions we're making today.
And what switched you on to ESG?
I have a legal background, and the interconnectedness of different disciplines, which is also part of my background, and understanding how you align environmental, social, human rights, for instance, labor rights issues, together with good governance. And that's actually a stream of activities / interests / areas that I've covered over the entire part of my career on both sides, buy side, sell side, and beyond, I should say.
And moving on now to defining. So defining sustainable investment or ESG investing with, investing with ESG factors in less than 30 words. And a warning, my listeners actually count the words. I had feedback 2 minutes before we started our interview, and someone was complaining, that wasn't 30 words. So go.
ESG investing. Using approaches related to screening, integration, active ownership, and moving towards impact.
Excellent. Well done. I can feel the tension in your answer there. What is your biggest investing mistake so far?
Maybe to clarify, so I'm not an investor in the sense of making fund management decisions. Are you literally referring to me as a retail investor allocating?
I'm as Martina human who has a pension fund or something.
I wouldn't say mistake, but in the earlier years, not questioning and querying as a pension beneficiary where my money is invested. And listening to IFA guidance and advice at the time that literally looked only at risk and returns in a traditional fashion and manner. And I've definitely changed tack here. And I've definitely worked, through the Network for Sustainable Financial Markets that I'm presiding over as the president. We've been working on education and capacity building initiatives, also with other networks such as Moral Money, to actually look specifically how we as retail consumers and pension fund beneficiaries can also ask the questions, when and where our money is going, especially when and where corporate pensions are concerned.
Excellent. Well, let's go to deep dive 1. We have 3 deep dives across our interview today. So let's start at the beginning with the introduction. Just simple and basic stuff. What does your title mean? Your title, Head of ESG Strategy and member of the General Management Committee. What does that mean?
Very good question. I start with the second. It means I'm part of driving top-down decisions around ESG integration, and not just only into investments and products, but really into business decision-making. And to be specific around the role ESG strategy, I oversee a team of 5, now since 6 analysts, and we are covering the full spectrum of ESG screening / mostly exclusions efforts, integration, active ownership, the methodology behind this. So we drive our own proprietary ESG research and ratings model. And we work very closely as part of a matrix structure with our investment teams that are implementing our approach, methodology, and decision-making into their investments across asset classes. And I think that's important too. And together with the legal and compliance teams, we are driving forward multiple of these initiatives currently very important in Europe, looking at compliance with the EU Sustainable Finance Action Plan. That includes the taxonomy, that includes the SFDR regulation 2019-28/8, which obviously looks at sustainability risk disclosures in investments and the likes. And last but not least, we are also, of course, helping in shaping the product offering and proposition for ODDO BHF Asset Management and private equity, where ESG and in future impact considerations are concerned.
Excellent. And for your role specifically with that title, if we simplify the investment value chain into a human owns the money, a human's gathering assets, a human's doing the investment research, a human's making the investment decisions, a human is influencing the ecosystem. Which piece of those roles is your primary function?
Definitely research, ratings, analyses, and influencing the wider value chain of decisions within the company and amongst core stakeholder groups. I can elaborate on that a bit as well further on.
Good. And I'm a working parent. You are too. So it's okay, by the way, if someone stumbles through the door, we'll just keep that in the podcast because it makes it entertaining. But how do you explain your job in a sentence to your child?
In one word: eco barrier.
Say that again.
Eco barrier.
Ah, wow. And okay. That I can see.
I have 2 boys, and I see this as a lifelong dedication, but obviously not in the context of controversial activities and weapons.
Yeah.
Eco barrier for me is someone that ultimately puts things into perspective and clarifies and say it as it is. That's one of my most, probably you've seen it on my social media accounts, most used words or combination of words with a hashtag.
Well, that's why I've invited you onto season 1, the originals, because I need people who can talk frankly, and look at things from many aspects, both the things that are going well and things that aren't going well, and talking candidly about them. So I like the idea of pitching Netflix on Martina and the Eco Warriors, right? Let's work on that project together, see where we can get it. Right. And last question for now, you're also a lecturer. First of all, I know the pain of that. I'm teaching again myself. So thank you for choosing to do that. You're teaching, I think, at Zurich and Henley. How are you teaching, just high level, maybe even in your opening lecture? How do you explain what is this sustainable investment case?
Very good question. There's, of course, always an academic evidence case, a use case to be made. And that use case very often is even more stronger so in industry versus academia from experience, empirical knowledge. But I try to set the scene in the context for what we very commonly refer to as the paradigm shift in ESG. You know, when we started in this area, and I had these discussions with many young people, we started in this area because of purpose and conviction, Graham. And this actually drives us through until this day. And that's why we are also highlighting and flagging when and where green or competence washing activities are going on. And that's actually quite a varying development in our field in the moment. But coming back to your question, I'm trying to set this context, explaining how the strategies have evolved from something that was historically socially responsible and ethical investing towards mainstreaming ESG, and now ultimately considerations outside of the traditional portfolio management theory and profit over everything, more towards, and risk and return over everything, I should highlight here, to actually more towards impacts and real economy outcomes that are also influenced by financial decision making.
Mm. And I see in your materials you referenced the Brundtland Commission. Gro-Harlem Brundtland is one of my heroes. I actually got to meet her and hang out in the airport lounge waiting for a flight once. And she was asking me all about where should I go on safari in Africa. So I think it was a good meeting. And you use the quote from the Brundtland Commission, 1987, quote, "Sustainable development is development that meets the needs of the present without compromising the ability of future generations to meet their own needs. It compromises environmental and social issues," unquote. I'm curious why you use it. I used to use that in the 2000s, and I've kind of gone away from it. But I'm curious, you choose to use it in 2021. Why?
For me, it actually shows a few things here. First of all, that the Sustainable Development Goals are nothing new. And that's also something that people tend to forget, right? They tend to forget that Kyoto Protocol was something that was launched by UNFCCC in 1997. They forget that sustainable development was something that was mentioned, referenced in the Brundtland Report and by the Brundtland Commission in 1987. And hence the same way as where we started the conversation today, that many of these issues are trackable and traceable, dating back more than 20 and 30 years. And we have a lot of examples here and a lot of discussions recently, especially in the areas of, for instance, the fossil fuel industry, where more and more it becomes apparent that not only issues, but potentially maybe even proposed solutions were in the cupboards, for a long time. And it's interestingly that this time frame ultimately correlates. But then the second part is it actually discusses of what we need to do now in order to influence and drive actions for what needs to happen so that the future generations can actually live sustainably on this planet. And hence, the materials I shared with you have deliberately chosen to focus on environmental and social issues. And these are very often, of course, linked to corporate externalities, and deliberately try to highlight the interconnectedness of some of these issues, especially when you look at the environmental issues, climate and nature. And when you look at increasingly so the interconnectedness from environment towards social, may that be around climate justice, may that be around the topic I'm driving forward in the industry a lot around the just transition mechanisms that we also need in order to transition sustainably from an environmental and a social aspect into the future. And ultimately, it also shows that we need to work on this collectively, because again, we are talking here about communities, we're talking about future generations, we're talking about an element of active ownership that can only be achieved in a collaborative fashion and manner. And I think this is why, and there are no surprises here, we have been in this field long enough, Graham, active ownership and especially engagement is literally our fundamental principles that already feature in the PRI's work, since 2006. So for me, again, it actually sets the scene for a lot of these different trajectories we're talking about when we talk E and S, and the underlying baseline is ultimately G.
For me, it also reminds of when I was working on the Emerging Markets Project with James and Jerome, Paul Clements Hunt at UN Environment Program Finance Initiative in Geneva. I went through the archives and I found materials, I think one was even from Deutsche Bank, or one of the original kind of supporters of UN Environment Program Finance Initiative. And there was all these brochures and what have you. And I'm sure if you went there today and pulled them out, they would still be relevant, which is very frustrating in some ways, because we've known, and a lot of the intellectual work has been done, and surveys with ideas were promulgated. And another thought is, when I teach using the Brundtland Commission definition, I also include the two sub-bullets. And one goes to, depending on the technology that's available, and the other sub bullet goes to the needs of the poor. And I think for me, it's partly what the just transition is helping to clarify, that piece about, well, what do we do about humans who have different levels of income and different endowments, natural or financial? And then I guess ending with the hopeful is technology is, for me, is the one thing that very, very clearly has advanced at a huge speed. If you look at the work from Bloomberg New Energy Finance, their fact book that comes out every year, and you see the price of solar and battery, how that the price is coming down and down. And now, the new solar can be the lowest per kilowatt cost. So I still think that's really relevant. To reference to the Brundtland Commission. If you are thinking through that expansive approach, what you're doing, and a bit later, I want to pick up where you use that kind of the three-layer explanation in your work at ODDO. Right, let's move on then. Just the very basics again. This is not investment advice. We are not selling. We are understanding what Martina is doing here. But Martina, tell us about, if one does buy the services, the investment services of ODDO, it's in some countries, and how does one buy them? Do you buy them through an advisor? Do you buy them on a website? Like, what are just the basics of how does one buy ODDO's stuff?
Sure. Yeah, great pleasure. Maybe first of all, a couple of key facts, as we always say. So we roughly manage 60 billion euros, and we have this amount under management. 52% of our mutual funds, and that's roughly 33% of our overall AUMs at present, already integrate ESG criteria. Our active ownership concept and process for voting actually covers all of the different ESG funds and has a certain capital allocation threshold depending on jurisdiction for all other funds. So we can already realistically say we cover, from an active ownership perspective, proxy voting, but also increasing the engagement, a large trajectory of ultimately the assets that we manage. And we have ambitions over the next year and a half to also get our assets under management over the 50% threshold in full. And I think this is a very steep trajectory. Many of us in the industry, started very modestly, and we have really made great strides here. So that's setting the scene. It's a European asset manager. We are operating via 10 different locations. I include Frankfurt, Düsseldorf, Paris, of course, where we're headquartered, but also Geneva and Zurich and Luxembourg, and then Milano, Stockholm, Madrid, and last but not least, Abu Dhabi. And we have an ESG integration approach and effort that actually goes beyond the traditional equity and fixed income into alternative asset classes. And last but not least, and you highlighted it, you can buy our funds in and everywhere and across Europe, but we are not currently up for selling our investment products in the US.
Excellent. And just a business of investment question. How do you price your investment services? And I know, all around the world, people are very price sensitive. Australia, South Africa, Canada, US, Europe. I've been, for example, a proponent of exchange traded funds where it's part of someone's strategy and they just want a broad exposure, keep the cost down, passive, and then make active bets and then pay. There's different approaches. But just a basic question: how do you figure out the price on how to sell your investment services?
Very good question. So first of all, we are stock pickers, bottom up by conviction. We do not have passive investment vehicles. And to be honest, therefore, I don't have to address difficult questions around cross-ownership or stewardship when and where ESG is concerned. But ultimately, yes, we are structuring our pricing around a management fee structure and an upfront fee usually that applies. And obviously, again, the different levels of the pricing structure, again, our sales team will be much better to answer these. But it's fair to say, we have, of course, a staggered approach depending also on which type of client audience. We are servicing institutional investors as well as the wholesale/retail community. So very much that determines as well the pricing structure of the different type of vehicles that we offer.
Okay, and then in that conversation that you're having with clients or prospects, what have you, and you're explaining to them the work of environment, social, and governance factors and how it fits in. How can you give us an idea, a look into what those conversations sound like? And if you could, you've got decades of experience in the field. How are those conversations different to when you first started in the field?
It's such an interesting question and so timely, Graham, because I just came off a client pitch discussion with a German prospect, fantastic sort of mid-cap company in Germany. And if you would have asked me, would I have had even a discussion about ESG with that organization 5-10 years ago? Probably not. Would they even had the knowledge of what ESG, environmental, social, and corporate governance, stands for? Maybe even 3 years ago, according to their own feedback? Probably not. So there is a steep trajectory, a learning trajectory, not only for us in the ESG team, working also with clients and of course our own commercial and client services teams on what and how to define the fundamentals around ESG. The ultimate expectations and opportunities are constantly growing, but also shifting, and very much depend on the jurisdiction that you talk to and with. I mean, in my previous roles, I had much more of a global focus, and I could go by region, say this is Europe, or this is US, this is Asia Pacific. Now I very much have to focus on the different, not only regional, but also the national components within the mix, because the different areas of progress, even regulatory requirements beyond the EU overlay, are fundamentally different in these different European jurisdictions. And the progress that's been made on ESG and the areas of focus are fundamentally different. The Nordics, we have already a discussion around impact, clearly in the Netherlands too, even in the Swiss jurisdictions. Maybe that's also to do with the fact that we're talking predominantly to a lot of high net worth individuals that are trying to, include and reflect their own values in the decision making. And that is a lot to do now with impact. And in other jurisdictions, such as France, you have a strong regulatory driven environment for a long time. But now, really with Article 173 and Decree 29, the strong focus on not only disclosing, but also reporting on climate and biodiversity risk, much more in an advanced stage than versus, the jurisdictions further east. And just talking about Central Europe here now, Germany, where the main focus is still on climate risks. And, of course, they have a strong tradition in Germany focusing on the Potsdam Institute for Klimaforschung and Klimafolgen. Ultimately, these institutions have focused for a long time and have provided education to the wider public for a long time on the implications of climate change. So there is a natural interest also ingrained in society in sustainability, but specifically climate risk related topics, while the remaining agenda is now just catching up. I just want to mention here, I had that discussion with a friend of mine who leads one of the publishing houses in Germany, a Portfolio Institutionel. I'm now sitting as a jury member on the awards, assessing impact investment strategies and how these are being literally mandated, implemented, asked for by the investor community. And if I would compare notes here from the experience I have in other markets, impact is still a very young field in Germany, and we see that from the type of information pieces we get and that are handed to us as an editorial team. But now this is picking up. I think it's picking up at speed, and that's the fascinating and exciting part to be in this industry, as you know, that there's always a new paradigm shift, that there's always evolution, there's always progress, and delighted to be a part of this.
Excellent. There's certainly that energy, and we'll get into detail about some things that are overpromised and underdelivered later. But I came off a call yesterday with a global investor, and they were actually losing assets in Northern Europe because they can't meet the need for the client, institutional clients, the largest names you would know. They just can't meet the need of that client for what they want to understand about the environmental, social, and governance performance of the underlying companies. So it's just business, right? Mm-hmm. Great. So let me then lead through that to your strategy, the strategy at ODDO. And again, why I'm very excited to have you on the podcast. Thank you for making the time and being so generous with your time. This new role that you have and the ability that you've had to kind of map out the strategy. I know ODDO has been with the PRI for a decade or so. So they've been active in some way, but it clearly looks like you've done a heavy lift in terms of rethinking things and getting things organized. So let me ask very quickly some small questions and then some bigger questions. So a small question, could you just in a minute explain the ESG strategy that you outline in your 5 points plan and your ESG activities overview, just very briefly?
Very great pleasure. And as you said, my role is not just denominated to focus on revamping, expanding, enriching the ESG research, ratings / methodology and approach for OBAM, but a bit broader than this. So the 5 points plan is actually 5 areas that we cover, that I cover and focus on, and that we want to drive forward with our 2021 to 2023 roadmap. So it's ultimately to refine our own focus and governance model for ESG, to expand our value proposition, and to define and align the ESG model, universe, and approaches also across and with the group, to shape our activities plan, to really create dedicated ESG initiatives and activities that help to clarify and communicate our role in this industry, and then to focus on targeted dialogue, to refine, the way we work internally, but also externally, and to meet the requirements of the future. May they be of normative nature, such as, SRI ESG enabled, maybe of regulatory nature. We touched on SFDR a bit earlier. And then ultimately how we are working with stakeholders across different ESG membership organizations, coalitions, and working groups that we support in line with the strategy. And happy to say a bit more about that as well. And last but not least, to align. I just classified it as the one ESG, one transition approach that will help us to shape our 3 pillars for the climate, ecological, and just transition.
Thank you. And as an ESG architect, I've worked with a number of clients, and every time, there's different humans, there's a different culture within the investment shop, there's a different philosophy and processes on how things get done. So I'm curious, the value proposition. Many people forget the first client for that value proposition is the CIO and the PMs, the portfolio managers in that shop, because as the ESG specialist, if they don't buy in to the proposition that you're presenting and they can't match that to the asset gathering side or the way they do the investment manufacturing, if you will, that's not going to work out very well within a few months or years. So can you unpack a little bit about how you are helping this make sense as a value proposition inside the shop?
Sure. It comes down to governance, policies, processes, systems, and people. And, with the governance, I mean, when I started, one of the first things was to sit down and discuss exactly with the CIO and the CEO who I'm reporting to, how we want to go about in building an integrated approach for ESG in the organization, in asset management up and foremost. And we literally looked at the ESG team. We reassigned and realigned responsibilities. So we have someone, just an example, and they're all analysts, but they have also defined roles within the broader spectrum. So we have someone looking at innovation, technology, and data. We have someone looking specifically at content, research, and product alignment. And we have someone dedicated to active ownership. And lastly, we, of course, have the head of ESG research and policy working side by side with me, who actually looks at policy and regulatory requirements as much as how these and other inputs would actually influence our investment decision-making. These analysts are investment experts, most part of them. They have worked very closely either with operational and or investment teams, and they understand how to actually model, build, and develop certain portfolio considerations so that we all can talk with them at a level. And we very much have multiple responsibilities working with the teams. So we're coming in as providing the methodology and the frameworks for ESG, including policies, including governance/committees that I've also established for ESG strategy, for ESG investment, and for ESG policy. And they also then sit alongside this trajectory of the different processes of what does it mean if we are implementing a new policy related to oil and gas, and we're going through this progress and process in a moment, in regards to investment feasibility. And, you know, they could actually give a clear indication of what that means in regards to portfolio constraints and outcomes. And they have these discussions, and therefore we have these forums to exchange and also to discuss the implications. And we do this on a daily basis. And then, of course, product and content development. If you think through the process of information gathering, but also disclosure, which is increasingly becoming important in a regulatory context, in an SRI and labels context, we really have focused and shifted working closely with product and marketing teams through that dedicated channel and ensuring that we are aligning the messaging and it is clear, concise, transparent, and comparable. And then ultimately, last but not least, technology and innovation, as I highlighted, it's also important to be at the forefront of many of these developments. And you've seen in my deck, one of the pieces of work that I focused on the first half of the year, beyond SFDR implementation, beyond the new governance model for ESG, beyond the work on a new active ownership concept and the expansion of the collaborative engagement angle. I've also focused a lot with the team now on building momentum around an IT data and services model that we are launching in September together with our IT teams. Here's another area in the matrix structure for collaboration, and that's been working very successfully. And I have to thank the IT representative in question for a lot. And we are now able in the second half of the year to actually triage more of the data inputs we use. So we currently use MSCI, we use CDP, we use information coming via Bloomberg and FactSet channels. But now we're even able to triage this information going forward with more alternative data inputs. And that's really a piece of work I'm very proud of, and I hope to exchange more notes on publicly in the second half of the year. But again, that's why, you know, we have really focused on shaping responsibilities around areas of necessity and needs, also meeting the clear requirements from the CEOs and the CIOs perspective. And I think we've come a long way in the first 7, soon 8 months that I've been on board. But I think we have made great strides and been very systematic in our approach in really defining the roadmap, right? And in defining what we need to do next. And I think that has helped really in building bridges.
Okay, one more piece on all the funds, and then I want to drill down on the Green Planet Fund. You've been very kind to share more details about that. I think that's going to make a great mini case study for us in this interview. So a quick question. I picked up this quote from some of the publicly available materials. The ODDO funds not integrating ESG criteria do not consider principal adverse impacts on investment decisions, as it has not been decided to assess, monitor, and report them in the investment strategy. So is that kind of the state of play now? Is that after these discussions you've just described, or is, you know, you must have many strategies to kind of work through, and you've been there less than a year. And so eventually, are you going to get to all of the strategies, or there are some strategies where you're not going to be allowed to work with?
This is very interesting wording, and that is very important wording, Graham, because it describes compliance with SFDR. Article 6, we have to, in the name of transparency, to actually say that funds that do not, and again, that's why so many funds have been recently reclassified, funds that do not proactively consider sustainability risks and principal adverse impacts will literally be an SFDR 6 fund. All the other funds, these 52% of the mutual funds that we have on offer, they actually integrate ESG in line with Article 8 and or 9, or 9, I should say, apologies. But this is literally a legal framework. And ultimately, to ask your second question, of course, as we are expanding assets under management, developing new products, but also realigning, readjusting some of the offerings, to actually reclassify funds towards Article 8 in the first instance, because there's obviously a staggered approach to move from 6 to 8, that the volumes and the assets under management in alignment with ESG are going to increase significantly. And that's exactly the ambition that I highlighted towards 2023, which also underpins our commitment towards the PRI and being a PRI signatory, because there's a mandatory requirement by that time frame to actually have more than 50% of your assets aligned and integrated, aligned with and or integrated in regards to ESG.
Excellent. So let's move on now to the Green Planet Fund, not the Blue Planet. So, so David Attenborough will not be offended that you've gone with that brand. You haven't trademarked it. Curious. Maybe you should. Who knows? And a tagline is "Play an active role in the ecological transition" is something that I found on the website, I think. Just reading quickly, to invest in global listed equities of companies benefiting mostly from the Green Planet megatrend. For example, business model significantly contributes to the challenges of the ecological transition around 4 different non-exclusive sub-themes, such as clean energy, energy efficiency, natural resources preservation, and sustainable mobility by integrating an extra financial analysis in parallel, unquote. And then I've seen some other materials where you describe kind of meeting the environmental challenge of global warming and so on. Could you take us through very quickly the big idea? I have a sense for what it is, but maybe from the insider's perspective as Martina working with the team, could you give us a little bit on how this came to be?
Of course. I mean, how it came to be exactly is probably a bit before my time.
Okay.
But clearly many discussions from hearsay, what I know was many discussions initially arose from the fact that clients were mandating, especially again in France, where, as we now know, Decree 29 is mandating biodiversity risk disclosures and reporting in the next couple of months to come. And the financial services management industry and investment management industry, has been quite centered and focused on many different topics beyond climate for some time. So that's actually what launched the initial idea to look into a fund beyond climate in the broader ecological and environmental context. I should also highlight that Nikolaja Kopp and Baptiste Lemire, they're both managing the ODDO BHF Green Planet Strategy, and Nikolaja Kopp was formerly the head of ESG research within my team. So he's transitioned fully into now the fund management role. That also shows you how much interchange there is between our team and the investment
really
management
positive.
team. Yeah, exactly. And the ambition here very much is, as you highlighted, to identify relevant themes. It's a thematic fund. It's a global equity fund. It has exposure to North America, to Europe, and to Asia. Ultimately, the ambitions from Nicolas was to address the challenge that the world actually, in the context of a 2 degrees centigrade global warming trajectories, needs investments of 1,500 to 2,000 billion a year if it wants to achieve these trajectories. And to then interconnect, the needs, again, we're talking of needs and the future generations, but also connecting the dots between climate and environmental issues. And ultimately, the ecological transition actually offers a way to invest in companies that have a competitive advantage and show an attractive, what we say, growth potential in regards to these 4 themes: clean energy, energy efficiency, sustainable mobility, and conservation of natural resources, and that actually are contributing positively and proactively to these developments. And that is very much in line with now the strategy that I'm setting in regards to the climate, ecological, and just transition trajectories. We really try to also, through this active ownership concept, which supports and underpins many of the ESG strategies, including the Green Planet, to actually shift the focus of where we are now and to raise awareness amongst companies, and then ultimately to measure and track progress in regards to how well they're positioned in order to meet the transition trajectories of the future. If you look at, for instance, the work that ISS is currently doing with climate aligned transition trajectories for voting and voting decision making. That's something we are looking very closely at because it's very much aligned with our own ambitions for creating positive change. And there are many other initiatives now that really are tracking climate aligned benchmarks, for instance, right? That are really tracking more on the climate side in the moment. But I see there's more room and scope for developments across the ecological and also the social spectrum to really, create that trajectory of change that we need. Because ultimately, Graham, what we have started doing is not just to exclude, but to engage. And not just to engage, but to deliver outcomes. And that, for me, ultimately describes also the ambitions around impact. But sorry, you wanted to ask another.
That's very important. Well, I can also see how your work in biodiversity, and I want to pick up that a little bit. I can see that coming through this more. But there's something else I want to pick up, and there's some impressive investment industry wordsmithing here around artificial intelligence. So I'm going to quote of one of the slides: use of natural language processing algorithms by management team with more than 4 million data points analyzed per day, with the objective of generating new ideas and detecting the most alpha generating sub-themes linked to the ecological transition theme. I mean, that is a lot of words. And some of it I understand, maybe it's above my pay grade, but I'm kind of curious how that works. Again, not to get lost in the weeds here, but just maybe give us something on that.
Very good that you're mentioning it. And again, I didn't want to make this a marketing pitch, so I'm probably too modest for all the great work, thinking, and progress that's gone into this fund and its construction. But ultimately, it works very much with the world of AI and natural language processing / sentiment analysis. And we are currently expanding this project, by the way. That's part of the next phase for next year, and when and how we will be able to use AI technology for controversies and entity analyses across our portfolios, and specifically the different type of ESG funds. But for this one here, we literally are screening, using AI technology that's based on Equimetrics' model. We are screening, and we are literally looking at around 200 max stocks that the Green Planet strategy holds with these different exposures to different jurisdictions. And we literally use AI-based algorithms, based on natural language processing, NLP, to filter a sort of multi-factor quant model that gives us a first indication on where companies stand in relation to these 4 themes. And then we do an additional overlay / analysis following the first screening filter that is actually managed by the management team, by Nikolaja Kopp, to identify better, how these different companies are positioned on the future trajectories on the green / ecological transition. And that's exactly.
I'd love to get hold of that widget and run through ExxonMobil's talking points recently about how they're somehow now part of the solution to global warming. And then also more curiously where Equinor or BP are. For me, I referenced the fact before that they're part of the consortium that won the offshore wind contract in January of 2021 in New York State. So, I would love to see how that sentiment tracks us. It's beyond the scope of what we do now, but I'm happy to drop stuff in the show notes afterwards and maybe have you and the team come back on at another time. Let me move on then. I want to pick up just a curiosity that showed up in one of the filings around the fund, and it describes a whole variety of risks. And I ask all of my guests this because it comes up in every time I kind of read the materials and look through with a due diligence mindset. Like you, I have a law degree. I'm not afraid to read 107 pages. But there's a list of risks here that the fund has, and you could assume a lawyer helped write this. So they get equity risk, credit risk, volatility risk. Lovely, lovely, lovely. And the last one they just slide in there, sustainability risk. Now, as any lawyer knows, you needed to be defining what you're going to define. So I'm just kind of curious, were you consulted on that, or how did that slide in there? Or what does it even mean? What does sustainability risk mean? Or is that just, we better put that in there in case?
Very good question. So it is probably a bit of everything of better put this in there, but it's also clearly aligned with EU SFDR regulation. Again, we obviously have to make sure that the funds that have a clear environmental objective, and in this case are also promoting environmental considerations when and where a financial product is concerned, and that is Article 8 at present, that we are ultimately highlighting this in the pre-contractual information. That was a key legal requirement. We had to go through all our prospectuses. Believe me, that's arriving in January. And then ultimately the first big project was 2 months. All the funds.
March, you had to get it done.
Exactly. All the pre-contractual information, the first massive big project. And again, I have to thank our legal and compliance teams, our product teams, the investment teams. You asked earlier if we are working closely together. That was the first project we are literally all were thrown into, and that I was coordinating across the group. And I'm continuing with the next task force in September on the topic when we are preparing for reporting requirements, which are now foreseen to happen in July 2022. Okay. The time frame initially was much tighter. You know, EU SFDR had mandated us to report by January. So we were literally getting ready. That's why we also implemented and developed and implemented this new IT-based system, which will help us to automate reporting amongst other things, such as the alignment and triaging of ESG data points. But yes, to answer your question, that is very much in alignment with the SFDR regulation and with the work that we undertook by the 10th of March of this year.
Okay, then another question that's not familiar to people outside of Europe, and I appreciate you unpacking. It was new to me until I kind of drilled down and figured out more about it. But in your words, this European SRI Transparency Code, I wasn't even kind of aware of what that is. What is that, and how does it help investors?
Yeah, great pleasure. So if you want to apply for labels, and again, our ESG funds generally have various different labels, predominantly ISR label, which is the French label, an F&G label, which is the German equivalent SRI label. And we're going through a process for a few other labels. Apparently, you're not able to mention them until you have them finally approved. So I cannot say too much more in the moment.
Kind of like a scout saying, you know, I want my rafting label and my first aid label, kind of like that.
Exactly. And you cannot actually disclose anything in the process. Otherwise, you're ultimately disadvantaging yourself in the process, which is fair enough. But long story short, yes, these labels have requirements which actually mean you need to disclose, for instance, your exclusion thresholds and your methodologies in dedicated SRI transparency codes. And they have to support and have to be in alignment with ESG policies and fund documentation. So this is ultimately the third component here in the pre-contractual information chain, which now includes regulatory requirements, but also the so-called normative requirements for labels.
And the way it's being used by investors, are they saying, I'm sitting in Belgium, I'm sitting in Switzerland, does it have the logo on it? And if it has the label logo on it, then I know it's something. Is that how it's being used?
Very much so. In Europe now, you see two major streams attracting retail wholesale, but also even institutional investors. One being labels, the other ones being fund ratings. And there are two major ESG fund ratings out there, you know, by Morningstar and MSCI. And we, again, our ESG funds are well rated by both of these providers too.
Okay, and then the Green Planet Fund, I saw it had a 5-year investment horizon that was described in the materials. Can you talk a little bit about how many assets are in that fund now, and maybe where you hope to be in 5 years?
Yeah, sure. I mean, we have over 100 million now, I think 120 roughly, if I'm not misquoting this. And we obviously have just launched a fund last year. So you can see there's really a steep trajectory for this fund to grow. And we would want it to grow also ultimately, ideally, with assets from outside Europe. I cannot say much more, but we definitely see there's a big momentum building for the fund. We see this across different type of investors. You know, you've got the very dark green investors, you've got more the mainstream investors, and you of course have increasingly also funds or investors, that look for fund-of-fund implications when and where ESG is concerned. So it's a broad array of different clients, but definitely the Green Planet Fund is the fund in the moment that is attracting a lot of attention. And then of course we have other funds which are picking up, you know, Green Bond Fund, for instance, or the Algo Sustainable Leaders, which is a strong broadband ESG fund. I just had a client discussion on this fund today. But again, these are more fundamental funds integrating ESG versus, you know, the Green Planet is really our flagship thematic fund. And again, trajectory there is to develop more of these thematic funds and to drive the discussion even towards impact.
Now, one of the fundamental architecture questions I often face, and this has been true of my work since 2003 when I first started to model, is do you do the ESG analysis first to give you your reduced universe, or do you do your financial analysis first to give you a reduced universe, and then perhaps you'll spend more time looking at the quantitative and qualitative ESG factors? What is the approach that you use in the Green Planet Fund or your other funds you mentioned?
Generally, it depends really. I mean, sometimes side by side, but in the first instance, it's driven for the ESG funds and up and foremost Green Planet, which is literally a thematic green fund. It is the first of what you just highlighted. We are going very much with an ESG approach, and then of course aligning further screens. And I should also say, you know, for some of the funds, we have firm-wide exclusion policies that of course limit sometimes the universe. But again, I'm talking here about investment feasibility. We don't want to tie ourselves to one approach that sits and fits all. We're doing this very much firm-wide for UN Global Compact, for thermal coal, up-and-coming oil and gas, up-and-coming tobacco, and existence as well is obviously controversial weapons. So the very typical screens that we apply generally across funds. And then we have sector-specific restrictions too. And they, of course, apply fund by fund or portfolio by portfolio. Also sometimes in line, depending on if it's a mutual fund or a segregated account, depending on client expectations as well. But we really work with these different type of constraints. And then we also look into other implications, considerations. But there is a fundamental difference as well if you look at the thematic fund range versus the fundamental fund range, which integrates, of course, ESG.
And how do you connect the dots between the strategy of the Green Planet Fund and a temperature? I know some institutional clients, some asset allocators have gotten their due diligence, and they ask questions like, how does your firm conduct carbon footprinting and temperature mapping or climate scenarios modeling now and in the future?
Again, a perfect timing for this question. We are going currently through our own transition, if and where the temperature of portfolios and climate value at risk are concerned. So these are exactly the considerations we're aiming to display in the near future, also given regulatory requirements, especially in France, which are up and coming and pending now. But we do, of course, GHG footprint assessments for all our portfolios. We have already developed an ETA climate scoring model. So climate risk assessments already feature on all of our ESG fund reports. We have this information data at hand. We can also model it, of course, for other funds and, you know, for segregated accounts and portfolios. And again, it is part of the ESG reporting that we do, but we're going this trajectory one step further. And we will also look at now disclosing information around temperature of portfolios. That's exactly the trajectory on the climate transition side.
Okay, great. This is the longest of our three deep dives, so we've spent most of our time here. I'm going to end this part one of our deep dive with a question that I ask all my guests. It's around pricing of pollution. So it's a key performance indicator. Swiss Re in 2020 announced that their internal carbon levy that they're using across their businesses is $100 per ton in 2021, and they're looking to gradually increase that to $200 per ton by 2030. So a question for you, Martina, at ODDO, what shadow or actual price for CO2 equivalent per ton does your firm use internally for your operations, not for the portfolios? That's the second part of my question. First part, in your operations, how you do your work, is there a shadow price that you track?
I know that we track, obviously, the carbon footprinting assessments within the organization. That's for ODDO Group, but I'm not quite sure if that also links back to shadow pricing. I would have to go back to you on this and obviously can give that.
Okay, great. And we'll include that in the show note. Thank you.
Please.
And then on the investment management side, the actual portfolios themselves, are you, for the Green Planet Fund, firstly, or any other fund you want to talk to, frankly, but do you have a number in there, or is there a way that the analysts look through the portfolio companies and say, well, this company is tracking $100 per ton, this company is tracking $5 per ton. If we roll that up, so is there at least some look through that rolls up to the portfolio strategy level that says, this is the number that we're pricing CO2 at?
Not yet. No, I don't think that this has yet been fully done as an assessment exercise, a reporting exercise. But obviously, we could develop this type of data. The question is, when and where is this mandated? We focus in the moment less so on pricing, but more on actually footprinting. And then ultimately, that links to the next question. What does that mean if we're going towards now building temperature of portfolio trajectories towards net zero carbon commitments, which we haven't yet signed because we felt that this is far too early and too many commitments are being made without actually underpinning them through actions and by actions.
Yeah, by many people in the industry, actually.
Interesting, exactly. And this is why, to be honest, we have been shying away from providing information we do not consistently have and can stand for. But ultimately, yes, carbon pricing, if and where this data is available. And again, maybe there's a challenge as well for us, Graham, and that's a very relevant challenge. In our portfolios, especially equity, we cover a lot of SME companies. And their sort of disclosure trajectories and disclosure information generally is very scarce. And they are not yet by regulation mandated to provide this type of data. And it's very hard to even come by it. So that's why, again, to confirm, we have done an overlay of the existing MSCI, CDP, and other data with our own research and rating/scoring methodology for the European universes, because we see there is a current shortfall of information in this. But that also means, if and where, of course, information is becoming more widely available, and that actually then links to the way that we can align it with our portfolios and the data we already have, we will absolutely do this. It's just I think it's a very important, very good question. But in our case, given also the universe that we cover, some of that is challenging / preliminary, but therefore, as soon as we can, we will do it. And that's exactly the approach and the ambition that I drive.
So I think that would make a great collaboration, putting on our academic hats. And I completely map to what you're saying around the SME in particular, and the question, well, I'm not listed, it's not required. My counterpoint has been, well, you're in someone's supply chain and they need to. So at some point it's coming. And that reflects some of my experience recently teaching at Villanova University in the College of Engineering, co-registered with the business school, where I had executives and middle management who were pushing back on some of this. And I'm pointing to, look, guys, you want to know that number. At some point, you want to know the number. You want to know the cost of your electricity. You want to know the cost of your water use. You want to know the cost of your pollution use. So that's coming. Great.
You are listening to the ESG and Coffee Podcast on Investing, Strategy and Sustainability. 您现在收听的是 ESG 和咖啡时间，投资策略和可持续发展。
Let's change gears now and jump into fast espresso shot questions 2. You've been really great. Please have a sip of water or coffee, whatever you have in front of you. Let's take a breath, because we're going to jump into some of our fast espresso shot questions. Again, just less than 60 seconds, less than 30 seconds, as quickly as you can. Question 1. What app is Martina most likely to be viewing on her smartphone while waiting in line, or waiting in the queue, as you might say in England?
Instagram.
Very good. What book did you enjoy reading recently? Fiction or non-fiction?
I think Kahneman, Thinking Fast and Slow, is something that I'm always rereading. And I had a great friend, we know him, Roger Irvin, Towers Watson, who was a great mentor during my time at MSCI. And he actually got me onto many of these interesting books, and that was one of them. And I'm always reading and rereading it.
For me, fascinating, that whole behavioral finance piece is that study on people collecting their kids late from the after-school care in Israel. That'll always stay with me. We'll talk about that another time.
Okay, you have to tell me more.
What is the best kind of pie?
The best kind of pie. Are you talking sweet and savory, or?
Your choice, ma'am.
It has to be sweet then, unfortunately, and it probably has to be my father's, who unfortunately is no longer with us. And he did this wonderful pie covering a layer of vanilla, sort of cream, and on top raspberries, which tend to be one of my favorite fruits.
Fantastic. Wow. If we're ever in the same city, which will happen after this is all over, let's do that. And then finally, for this segment, as an investment professional, what has been your most meaningful success so far?
Contributing to relevant/material investor coalitions driving progress. That was the one point we haven't touched on yet. I highlighted that we are very engaged and we have really upped the game and trajectory for ODDO in many of these groups. We focused historically a lot alongside the climate trajectory on relevant coalitions, Climate Action 100+, CDP, and of course, working groups related to many of the PRI and investor groups and coalitions operating in this area. But now we are focusing also on the ecological transition that we touched on today, and hopefully we have more time to talk about the biodiversity handbook next time. At TNFD, we are acting as an observer on this group and a contributor. We are signatories to the Finance for Biodiversity Pledge and part of the working group of the Biodiversity Foundation in this field, or Finance for Biodiversity Foundation, I should say. And last but not least, of course, Just Transition. We are founding members of Finances for Tomorrow's Just Transition Coalition, which has just gone live end of June. And we're building a trajectory alongside our active ownership strategy that will be also highlighted and flagged at COP26. And of course, World Benchmarking Alliance. And I should also highlight, thank you, Nikki William Bihari, for making me the Just Transition Collaborative Investor Coalition kick lead for this group, which is very dear to my heart, because for the first time I'm able to bring these different type of groups on the same topic, in this case the Just Transition, together, and that will include PRI, Finance for Tomorrow, World Benchmarking Alliance, and others, so that we are moving towards joint visions and trajectories versus fragmented approaches. And last but not least, of course, data transparency, clarity, consistency, and comparability. You've always heard me talking about this, and this is again not just a tagline. I'm sitting on the Enterprise Data Management Council and on the Enterprise Risk Management Council, which are two groups that have literally now taken the ESG challenge around data and frameworks into their way of engaging with multiple stakeholders on the issue, on the investor side. And I'm delighted to be able to contribute to that work. And of course, last but not least, co-chairing the ICMAS group on EU SFDR. So if you heard me talking a lot about regulation, about compliance, legal aspects that are close to both of our hearts, I'm delighted to be part of that working group, because it really will help to shape our ambitions towards bringing to the market an implementation guide on SFDR for the investment management industry later this year.
Great, thank you. That's a very long espresso. We can't have you go to sleep tonight, obviously.
No, sorry.
All right, let's roll through deep dive 2 then. I want to pick up on the concept of ideas. So, Martina, where do investment ideas come from?
Collaborative engagement. And what do I mean?
I was hoping you were going to say staring at the sunset or in the shower. Are those not options?
They are also options. That is obviously more the maybe innovative conceptual approach for ideas. But when you really want to get them together and to bring them together and to get more inspirations or inputs, I'm talking about collaborative engagement. In our group, we have dedicated committees, which are highlighted, but also certain forums where we bring new product ideas, for instance, to the fore, where we discuss how regulatory developments might have a potential or a significant impact on our divestment or decision-making strategies more broadly, also as a firm. And that's why I think, that's from experience what I've seen, where a lot of these ideas are being born, especially as now we are all operating remotely. These type of discussions online and hopefully in future in person are becoming increasingly important, because people need to have ways of engaging to develop.
Absolutely.
And
yeah,
that's one way.
Yeah. So I do want to talk about that. So I'm glad you touched on that. So Kathy Wood, the active investor in the US, quite famous for some of her kind of huge bets at ARK Invest. something that she does differently, which I think is important in this age and improves the quality of their work, I would argue, is that she allows the analysts and the portfolio managers to present their thesis in some way into the public domain, for example, on Twitter, where they can get beaten up by, anyone with a Twitter account on why their great big investment idea is not a good investment idea. What is your view on that? And, are you one who likes to put those ideas out there and get them tested? And does your compliance department even let you?
Good question. I mean, we would not per se put investment ideas that are fully developed out there into the public domain, but we are literally creating teasers around certain concepts. And when I discuss just transition, for instance, as an example, we use the concept that we have now developed and implemented around active ownership. We tease this in our meetings with clients. Mm-hmm. And then ultimately we use the opportunity to engage publicly. That was through the Finance for Tomorrow Coalition, to actually then create further feedback rounds. And then we used, discussions with clients, very targeted discussions, when and where, we could actually place and position the strategy. So it was a multi-pronged approach, but it also highlights that we're doing this depending on the type of discussion, on the type of audience, and of course, on the type of area of development. But we see that as an important part, right? To actually probe further developments and get further inputs. And we're doing this now proactively with this idea around an impact fund, by the way.
Okay. And so it's one place where the stress is being placed is coming through COVID. It's changed many people's opinion about what's important, what they're doing professionally. It's also changed businesses, as we began our interview today. So, and there's a description on your website looking back on Q4 2020, quote, "The disruption caused by the crisis has highlighted the importance of building sustainable and resilient business models, taking into account all stakeholders' considerations," unquote. Could you talk very quickly, Martina, about what has changed because of COVID-19 and the pandemic and the economic impacts, but also people thinking systemically? How has that changed the thinking, maybe of you personally first, and then maybe the people that you work with?
Sure, a very good question. I think, first of all, social topics are rising to the fore. We see that even regulatory topics linked to the social taxonomy that are highlighted are becoming increasingly important and relevant. And we know that will also drive investor demand and sentiment. But more specifically around COVID, when you look at human capital management implications, and we recently wrote a paper on human capital management. It's on our website. We have done a bit of a briefer, shorter summary of it in the German publication Absolute Impact, which is also available, unfortunately, only in German language. But we talked a lot there about the implications of human capital, remote working, considerations of health and well-being, even, safety at work in the personal context. And we try to actually explain that increasingly human capital management considerations, broader stakeholder considerations are featuring not only in thematic discussions, in discussions around, thematic also investment funds and strategies, but also increasingly in mainstreaming ES and S, I should say, G. And if you look at our methodology, right, you've seen this, we had a strong focus from the beginning when we established the model on S. So we obviously cover the full spectrum of E, S, and G pillars, alignment, again, with MSCI's methodology, but also with other inputs. But if you compare our strategy here and our model methodology, it's fair to say 40 to 50% of the different criteria and the way we assess companies alongside these criteria, there is a 40 to 50% allocation towards S across sectors, versus just 10 to 30% towards E, and 30 to 45%, again, across sectors, but it then depends on the sector. Of course, I should also highlight this, on G. And that is quite actually something that I haven't seen with many other managers, unless they're creating a strong focus on social and social impact, for instance. But that is very much inherent and proprietary to our model. And within the S category, 30% are literally dedicated. When you look at criteria and weightings, of course, and measurements are in that same bucket, 30% go to human capital management considerations.
That's really interesting. Whatever you're able to share in the public domain, please send me links and I'll be sure to put that in the show notes.
Great.
One critical part of that 2023 strategy you have for the shop involves training. So a question for you, what ESG training certifications courses are you recommending or have you used? And at this point, maybe a good time to announce that I'll be teaching at Harvard Extension School in 2022. So there's that course, reasonably priced. Brilliant professor, someone said. And I'm even thinking of doing the CFA ESG certificate just because I feel like it. And Ben Yeo and other colleagues helped develop that. And they're in their third iteration now. But what are some of the certifications or training courses approach that you're taking with your team at ODDO and the whole shop?
Very good question. Training features very high up on our agenda, also in the personal development and human capital management / HR side at ODDO. So for the team, we are looking exactly CFA ESG. That's been highlighted and now on demand by a couple of the team members, including myself. I would love to do this as well.
Let's do it together. We'll have a study group.
We should do that. Please reach out after, because I have got the official okay to proceed. So it's now finding the time.
I've got another CFA in Singapore who wants to do it. We can expand our minds at the same time.
Let's please absolutely follow up on this. And that would be my key recommendation, of course. I'm also, and you've been probably involved too, there's a CFA ESG leaders roundtable group that discusses regularly the developments of the different type of CFA classifications and courses you can do for ESG and now even up and coming climate risk. So really recommend that group, because we, again, collectively as a group are discussing, opportunities for different type of modules, courses, and even then areas that are relevant to our industry. So that's another brief side note. We should definitely catch up on this as well. And of course, then there's the Cambridge Institute for Sustainability Leadership, which is an MBA program or an exec MBA program. But I've friends who have undertaken these courses, and I can definitely say they are very credible. And if you are able to do some sort of courses, but in a sort of shorter time period, maybe also if cost is a consideration, right? They are by Imperial College, for instance. I've done a few of them, climate risk, nature-based solutions, and other courses. There are a couple of online courses free of charge, or they cost maybe the equivalent of something like 60 to 80 pounds sterling. So maybe your maximum $100 US dollars, right. Where you can actually hone into a specific subject area. It's the EDX platform that's available online, again, where multiple universities have connected. Maybe Harvard is on there as well. And you can undertake specific ESG and climate risk related courses and modules. And you're able then afterwards to do a bit of a test and certification scheme, et cetera, But they are very often, surprisingly, Excellent. Also very good.
Yeah, no, I think that's a great way forward. That is some of the upside of this digital life that we have, that we're able to add to that along the way. Well, let me quickly try and get us to the end of the deep dive 2 here. Sell discipline is a critical part of any investment portfolio. You've got to know when to exit your particular holding. How would an ESG factor trigger the sell discipline for the Green Planet Fund or any other fund, if you will? Are those discussions that come up at all, and how do you do it? Again, as briefly as you can, please.
A sell discipline, you mean by a company that is within our portfolio? Or...
Correct. So there's it's a holding, it's a portfolio company, something's happened. And, classically on the financial side, bankruptcy is a forced exit situation. But and here I'm most interested in ESG factors causing a sell. Great pleasure. Maybe coming back to what I highlighted a bit earlier around what triggers a sort of divestment process. So our active ownership model, and that's linked to the exclusion / integration strategy, of course, as well. But our active ownership model also foresees an area for divestment. So we have an individual targeted engagement strategy that we run with companies, where we would expect companies to work on specific ESG issues within a time frame of 18 to 24 months. Okay. If the issues are being resolved, at least being addressed, and we see a positive change trajectory, we ultimately continue and re-emphasize with the engagement.
if we do not see a trajectory of change, we utilize our role and our decision-making power as active investors through proxy voting, for instance. And we work, and I should also highlight this with ISS here, on proxy voting decisions. And ultimately, we have developed different ESG benchmarks when and where we would like to see, again, certain areas for improvement, especially if we're talking about Climate Action 100 trajectories. We are committed to that coalition. We are supporting the coalition. We're also using the benchmark for our decision-making. But that ultimately means we are using also then the proxy voting opportunities to get our voices heard. And last but not least, but we say this is the last resort because we don't want to lose the seat at the table, but we have the triggering of the divestment as part of the process. If we do not see any improvements within 18 to 24 months, if we cannot achieve any further and better results, and if we cannot apply our proxy voting decisions, and as a last note here as well, if we cannot make this a collaborative engagement topic. But this is why as well we are so keen, and this is not again a tagline, it's part of the strategy of why we have joined the material coalitions / memberships and working groups that are highlighted, because a large part of them really enable us to engage on transition trajectories for climate, ecological, and the just transition. And they have very much developed methodologies and frameworks now that we can use as investors to jointly push and mandate for the same goals. So this is ultimately, hopefully, is a multi-pronged and multi-staged process, but this is ultimately giving us the seat at the table, giving us the opportunity to influence change positively, but also keeps us an option for divestment.
Okay, let's come into and deep dive 2 then with this question on greenwashing that I'm asking all of my guests. It's a huge topic. It's overshadowing the work of ESG and investment. You would have seen recently the market sizing report came out from the Global Sustainable Investment Alliance, and the European number had actually shrunk, partly driven by some of the labeling issues around SFDR that you spoke about. So my question to you is quite succinct, Martina. Do you agree greenwashing is real? And how does it hurt the work that you do and the work of the Green Planet Fund?
Greenwashing is real, and it exists at the investors, issuers, and of course service providers level. We should all ask ourselves the question of, how we can be more accountable for the decisions that we take. You saw my notes on this earlier. For me, that means we drive and we expand and enrich our own methodology and the model that we use for our decision making. We work very closely with investment teams to also understand prevailing issues and to highlight them as part of the engagement process. But again, in the industry, that is not always commonplace. We see a lot of, a lot of greenwashing, I think, where green labeling or naming, I should rather say, is concerned. And it's interesting, if you look at the GSIA report and when and where, outflows are concerned, these outflows are apparently, to the Bloomberg's recent article, right, are mainly due to the factor that we are now with EU SFDR are tackling greenwashing considerations. And quite significantly, because you have to classify your fund, you have to disclose your ESG methodology, you have to disclose how you are addressing sustainability risks and potentially even, of course, adverse impacts. So that means there's already a trajectory for more clarity and consistency when and where ESG labeling, naming, and ultimately products are concerned. And where we will see, I think, Graham, where this is now going. But for me, side by side with this greenwashing exercise, and again, labels and regulatory frameworks are trying to build a bit of a barrier and a new threshold here. I think there's also the ongoing discussion around competence washing. And if you look at the industry, we have been in this for a long time, 20 years,
right.
In various different
got the platinum hair to prove it, right?
Well, exactly, right? But this is exactly right now. If you look at what the latest commitments are, and again, that's why I said we have to be very careful making commitments and then ultimately not being able to follow this up with actions. It's no surprise to me that a lot of the decisions are being made by people that have maybe not even the intention to make these commitments, and that might not even have the ability or capabilities we need in order to be a credible industry for the longer term. And I've come across, individuals across the spectrum here, but I think it is something that we might also be able to address if we are looking more for real ESG experts that showcase the relevant track records, that have done the type of work that we need in order to raise the bars, the benchmarks, and that actually are not just committing, but that are providing relevant solutions and actions. And maybe that's the way to find them.
Yeah, I couldn't agree more. And that's maybe going to be a topic of a whole nother season that I'm going to look at. Right,
You're listening to the ESG and Coffee Podcast, hosted by Graham Sinclair. Sie hören den ESG and Coffee Podcast. Ihr Gastgeber ist Graham Sinclair.
Espresso shot question set 3, short 30-second answers. You ready?
Absolutely.
Here we go. Do you have a favorite type of tree, and what is it?
I like birch trees.
Lovely. What one book on investing would you recommend?
I very much appreciate the work by Rory Sullivan, and he really wrote for me the Bible on responsible investing. And I'm so delighted. That's our next book endeavor, and that's my next call right now. Graham, I'm working on a RiskNet book on ESG and portfolio construction, moving the needle, discussing the trade-offs, getting the insights, the technical skills and abilities that this industry needs to understand what we mean by ESG screening, integration, and active ownership, and how this is actually looking like, and providing case study examples also from investors that are mandating integration approaches.
Excellent. How is your own retirement fund invested?
Very good question. So I invest in various different retirement schemes. I invest very much with a large scale provider. I've aligned different schemes. That was a massive effort, because when you obviously change your work, you ultimately always change your scheme. But now I can fairly say that a large part of my assets are aligned with sustainable investments / funds. And I'm again working on this consistent conundrum here that I think we also need to address as an industry, that I can get more transparency and clarity, especially from providers and advisors, in and around the construction of some of these funds, and ultimately what they mean by different definitions and labels that they provide. And hopefully that it will be much easier in future to align and transition from one pension scheme to the next. For me, this is a big bottleneck in the moment, and no one seems to be willing to pick this up and to address this, at least here in the UK.
I couldn't agree more. It took me about 3 minutes to buy my electric car online. I don't know where some of my money is. I'll just say that today. Right, question 4. What advice would you give to the 17-year-old Martina based on what you know today?
Stay on course in remaining a universalist. I say this quite often, but I think this is again the Leonardo da Vinci age. This is again, right? ESG is all about interconnectedness, understanding complexity, exploring new fields, driving innovation. And we need specialists. And I'm always quite laughing about the terminology around ESG experts. But at the end of the day, the ones that I know, and include you here as well, for a long time, we all had so many different and complex change trajectories, paradigm shifts in our history. And I think we wouldn't be here today if we would have not been able to explore all different sides of ESG.
Excellent. And what is your advice to people seeking to enter the field of ESG investment and finance tomorrow, in less than 60 seconds?
Educate yourself. I think, first of all, I have this discussion quite often with many different young people. Educate yourself on the options that are available and the type of pathway that you would like to take, and change course if and where possible. Don't get stuck on one trajectory only. I'll give you an example. Our discussion here has really now entered the mainstream. If you started in ESG and you were on the fund side, you talked about ethical and SRI investments. If one of us would have only been fixed and stuck with the so-called ESG screening approaches, we wouldn't be mainstreaming ESG today. But likewise, if you're only looking at ESG from a pure product perspective, you're missing out on the regulatory requirements that are very much impacting the fund and product developments of the future. So educate yourself constantly on these developments to be ahead of the curve. And last but not least, use innovation and technology to your advantage. They are strategic enablers. You can achieve momentum, you can achieve scale, and you can really achieve new efficiencies by using and utilizing technologies such as AI/NLP. And we discussed that today.
Okay, so this shortest deep dive is deep dive 3. So let me just touch on 2 or 3 items here. The first one is this concept of ESG alpha. Mm-hmm. So I'm not a fan of this phrase or this framing, because what it suggests is that ESG is something over there. You kind of test it like some kind of factor or exposure to emerging markets or something, and then you check it statistically and run your models, and then you have some answer. Voila, right? But I know other people are very fond of it, and it gets mentioned very often. What is your view on the so-called ESG alpha?
Yes, I think it's a twofold sword and twofold discussion generally, because on the one hand, in order to attract the mainstream and to build momentum for ESG, you need to also generate a certain amount of alpha and positive, maybe even outperformance. But likewise, you're missing the point if you're focusing on the risk return spectrum only. And when we highlighted earlier that there are many new investors, especially on the high net worth side, but also on the institutional side, are increasingly focusing on impact and impact considerations with outcomes out of the financial side of the spectrum. It is for me also a clear trajectory that the alpha discussion is not always fast forward and center. So I think it really very much, and this is again deliberately a very vague answer, but I think it stands for the different type of appetites in this industry. I think it very much depends on the client type, Graham. And we know, though, and that's the last note on academia here again, that ESG strategies over the medium to longer term can definitely drive positive performance and do not just provide downside protection from risk. And again, Harvard studies out there, University of Hamburg with the Deutsche Bank Meta study, Oxford University, many different papers from Zurich that I know of. So there is obviously the academic evidence that we have positive performance trajectory, and maybe that could also, of course, be translated towards alpha. But I hesitate to say that this should be the only and one consideration for ESG investing.
Okay, and then on engagement, thank you for outlining earlier your 18 to 24 month view on kind of engaging with the company. I really appreciate the clarity that you bring to your team on that. There's a lot of people I talk to, even some of the interviews on the podcast, they're kind of vague. They don't really have a handle on that. So I really appreciate that you've explained it and you've got that view. Can you talk a little bit about what are some of the misconceptions of what's possible with engagement? Like, help put us in the room with, Martina and the team are sitting down with an analyst and a portfolio manager, and they're talking about company X, and maybe they're going to a meeting with the company, and then that plays out or it doesn't play out. Can you just give us a minute or two, putting us in the shoes of what it's like to be there and some of the myths of what does or does not happen?
Absolutely. Maybe starting again with your second point, misconceptions. It is very clear, and there's, again, academic evidence around this, that the relevant levels of active ownership are supporting positive change trajectories on the one hand and positive performance objectives on the other. So there's academic research around this. So that's debusking, hopefully, one of these myths around, is that really relevant? Is that really material? And then literally around the decision-making process, and what's relevant here is ultimately, we have established a very strong process around what we want to achieve with, on the one hand, individual, shorter term, and collaborative, longer term engagement trajectories. And if I could quickly just highlight and outline what that means, for individual engagements, we are aiming to have these type of 1.5 to 2 years trajectories leading to certain outcomes, targeted engagements that will then either move towards collaborative engagements, to voting decisions and or divestment, as we highlighted. Medium to longer term engagements, really kickstarting then and there, ultimately through collaborative bodies and coalitions to build multi-stakeholder engagements and perspectives. And help shaping these positive change trajectories are highlighted around the climate, ecological, just transition, and underpinning all of this through a strong threefold process. Again, I would say one is around the relevant policies, then the processes, and last but not least, monitoring/reporting. And that means, in our process, that was part of the materials I think I've shared as well, we very strongly focus first on identifying certain issues, naming them, and these could be issues that actually have then certain target trajectories by company and or stakeholder group. And we aim to define, certain engagement targets and KPIs in line with portfolio manager priorities. So we're definitely working closely with the investment management team here. And they're focusing either specific events and look at company and or sector level. We look at the time sensitiveness of these issues for the sector, for the company. And we are looking at strategic aims and how the company, again, in our broader context of climate, ecological, and just transition, aims to meet specific change trajectories. And then, alongside the trajectory of going into preparations for meetings, starting an engagement dialogue, participating potentially in multi-stakeholder dialogue side by side, we're then bringing it back to say we now need to document and monitor and report on results. And we ultimately also need to share best practices with the industry, because to mention here as well, we are trying to build now benchmarks and trajectories for engagement alongside three buckets. There are leaders in the space that others can learn from. There are learners and there are laggards. And ultimately for the learners and for the laggards in particular, we're trying to bring them up one level. And again, we realized we cannot do this just individually. We need to do that through collaborative engagement. But therefore, a very defined process, and you can then read about the outcomes in our engagement reports. So you can find the policies, you can find the reports for voting, but also for engagement on our website.
Okay, excellent. Very quickly then, I'm interested in the view from Europe on the proxy voting season. It was quite active here in the US. And I'll put some links to that in the show note. But in particular, one I'm fairly close to, and I'm hoping to write a case study on. I still conversations to come, and I will be interviewing one of the protagonists at Engine Number One. But I'm curious how the whole Chevron proxy voting AGM or the ExxonMobil proxy voting AGM, how those played out from the perspective of where you're sitting in London working for a Franco-German shop?
Yeah, very good question. I mean, first of all, these sort of engagements also come up in collaborative engagements, right? Climate Action 100 Plus.
Right, they were key. Yeah.
Exactly. We discuss these, we address these, and we ultimately drive joint decisions. You highlighted some of the companies in the fossil fuel industry. There are also others, for instance, ArcelorMittal that we have highlighted a few times, where ultimately our joint actions as Climate 100 Plus have led to the first carbon action report of this company and, committed level of carbon neutrality in Europe, at least by 2050. So these are just certain outcomes that we are proactively supporting. And again, you see maybe in our sort of 2020 engagements, we first of all have upped the game. We engaged directly with companies. In 2019, there were around 66 engagements. We upped this number to 128. We likewise, as I highlighted earlier, on all of our ESG funds or the companies within these portfolios, we are having a benchmark for engagement that we drive, a benchmark for voting that we drive via our proxy voting provider, ISS. And we are defining the benchmark on the trajectories that we want to see. And we had a couple of key voting/engagement issues and successes, which mainly relate, and you can read about that in our report as well, to climate strategies, to the green share of turnovers, to governance implications, supply chain management, protection of biodiversity, but also business ethics and corporate governance, and of course, human capital. So you can see, these are just a few highlights, but you can see we have a very well-diversified view on the topics that we're engaging on, and also ultimately the topics that are driving our voting decisions.
Okay, let's come into land now, deep dive 3. As I said, was the shortest of the 3. Let's look to the future. You've already given us some indication of that. Your own strategy is mapped to 2023, as you said. But as you sit there today and, you look back at the 2 decades, you're looking forward now, there's a big push to 2030 about we've got to halve climate pollution in some way, shape or form, and it's going to be tough. It's not going to be easy. But what would you say is the future of ESG and investing? Maybe focus on 1 or 2 points so we can move quite quickly.
Sure. Future of ESG is, I think, further alignment around definitions. It definitely has to happen also when and where data and frameworks are concerned. And it also means more innovation. Means innovation in regards to product evolution. It means innovation in regards to technology. And it ultimately means maybe also finally the mainstreaming of ESG. We do not have to name this ESG anymore. We had to carve out a niche for ourselves, right? It was historically SRI. We wanted to overcome the idea and context that this is all somewhere linked to socially responsible and or ethical investing. But I think the time is and has come now that we are also integrating here extra financial decisions in broader implications linked to accounting, linked to corporate and investor reporting, you name it, that I think we can very soon just talk about financial decision making.
Part of that does worry me that we've got like a whole wordsmithing industry, in the same way that one of the large consultant accounting firms said they're going to hire 100,000 new humans to do this. So don't get me wrong.
Yeah,
absolutely. ESG is an investment in every investment decision. I've said that many times. I'll say this on this podcast. I am worried, though, that we'll just get layers and layers of wordsmithing. I'm so keen to see more and more of the humans who are actually putting money to work in new ways, new technologies, and with new business models. Let's come into land now. End of deep dive 3, ESG in 100 moments. I'm working on a book project. It's a history of ESG in 100 moments. It's meant to be colorful and interesting, not meant to be an academic work. But if you read this book, you picked it up, you read through it, looked at the photos and the pictures, interesting, you put it down, and then suddenly you thought, oh, hang on, Graham, you've forgotten my favorite, or what I think is the most significant moment in ESG that should be in your top 100. What would that moment be?
I think there are a few moments here, Graham.
I'm going to hold you to one.
You hold me to one. Maybe the formulation of the Sustainable Finance Action Plan. Because for me, it's really for the first time a way of channeling commitments into actions which will have long-term impacts. When and where the increase in transparency around sustainability risks are concerned, when we see an improvement of the comparability of financial products, when incorporating sustainability into investment decision-making, for instance, and where we see a contribution to the realignment, we say, right, of investment flows and or sustainable investments and investment flows. And last but not least, when and where we are focusing more on reducing greenwashing. So I think for me, all of these areas are being touched on by the EU Sustainable Finance Action Plan, and then more specifically by the work that's been done now around SFDR. But I hope we are not losing sight and track, given the sheer complexity of increasing regulatory framework standards requirements across jurisdictions, even across the EU.
I'm just figuring how hard it's going to be to have the winning photograph of that, because it might just be a building in Brussels, and that doesn't look so good. I'll come back to you with that problem separately.
Please.
Right,
use
here we
the
go.
stars and use all of them, not just the 27.
I like that. I like that a lot. All right.
You're listening to the ESG and Coffee Podcast, hosted by Graham Sinclair. Вы слушаете ESG and Coffee Podcast. С вами Graham Sinclair.
All right, a fast espresso shot question set 4 is our last set, and then I've got 1 or 2 questions, and then we're going to wrap. Thank you so much. You've been so generous with your time. Here we go. And these are based on the Bernard Pivot inside the Actors Studio and the Proust questionnaire at the back of the Vanity Fair. Question 1. What is your favorite word?
Harmony.
What is your least favorite word?
Conflict.
What profession other than your own would you like to attempt?
Probably an artistic one.
What profession other than your own would you not like to attempt?
I have to think about this. It's very hard to make trade-offs. And I don't think I could say I wouldn't want to work in a specific field. I think we're all very fortunate we're having a job in the moment.
What attribute does an excellent investor have?
Detail, understanding of context.
Detail and context. Which living person do you most admire?
David Attenborough.
What is your greatest extravagance?
Travel.
Which talent would you most like to have?
Speaking a Far Eastern language.
You already speak so many languages, and that's something I like about you. What do you consider your greatest achievement?
Being able to influence this industry that we all have been collectively building.
What is your idea of perfect happiness?
A day off somewhere at the beach with a family.
Sounds excellent. This is your chance to ask the audience a question, the power of one. What can we do about making sure environmental, social, and governance factors are on every investment decision? What question do you want to put to the audience listening to this podcast?
How are you formulating, shaping, expanding, enriching your ESG decision-making process? What are the driving factors? How do you include trajectories for improvement and change?
And so to the final Goldilocks question. Tesla is an American electric vehicle and clean energy company based in Palo Alto, California, listed on NASDAQ. Their stock is never flat. It was trading at $660, up 15% on the day 2 days ago when I last checked. Is that too high, too low, or just right? And why?
I think generally stock prices these days are very much showcasing the volatility of our markets. And beyond the share price, and I don't want to per se comment saying it's too high or it's just about right. I think what worries me more, Graham, is the fact that we're now going to alternative currencies such as Bitcoin, not making comments if that is the right or not the right currency, but just looking at the levels of influence. As soon as Tesla moves in or out, it seems to determine the value of that currency. And for me, that's linked to an individual entity / maybe even an individual person and his or her decision making. Then this is quite worrying. It showcases the trajectory for manipulation, influence, and ultimately controversy.
So to the market close. You've been a fine guest, Martina Mcpherson, Head of ESG Strategy at ODDO Asset Management. You are one of the originals. Thank you for your hard work over many, many years in the practice of investment and finance. I like to say the investments you make become the world that we all live in. Thank you for trying to make it better. And thank you so much for coming on the ESG and Coffee podcast.
Great pleasure, Graham. We will follow up. We have our study group for the CFA, and it was a great pleasure to contribute to this. All the best. I think it's a fantastic effort. Thank you.
Thank you so much.
And now we keep the tape rolling to hear from Graham and his guest as they reflect on their discussion and anything they wanted to add.
And so to my bonus tape, where my guest and I get to chill out a bit, have another sip of coffee. It's been a good, solid, long interview. Martina, is there anything we missed? Any question you really wanted to answer, but I never asked you?
Maybe something around of how do you determine influence and what do you see as your personal goals and achievements also for the future?
I was going to ask you about how you measure your own personal performance, but I was cut for time. Please pose that question and answer it.
Yes. how do I measure my own performance objectives, goals, and potentially also change trajectories? I think, first of all, I have great ambitions, but ambitions for actually changing the way we do things and the way we could potentially improve them. I see there's a role for me as this ambition around being a universalist to actually take more concrete actions around, maybe education, around bringing together different groups for collaboration. Hence, again, what I highlighted, so delighted to be really a lead for a collaborative investor coalition. I think that's a good starting point. But I see there's also a need now, maybe a more aligning of what I'm already doing, which is NGO space, academia, industry. We haven't touched much on this today, but I would love to use like the NSFM network in a way that could help in driving collaborative actions. Therefore the future and goals is to be really also very much top down at the decision-making tables of when and where corporate decisions are being made around sustainability. And the longer term trajectory is definitely to be involved at a board level, at a sustainability leadership level, to really drive top down decisions across different organizations that are moving our markets. But that is obviously future music, and very happy to where I'm now, where I can already top down within the investment world, really drive decision-making at ODDO and in the industry.
Mm. My PhD question, if I ever get to study, is how are institutional investment decisions made? And for me, some of the great opportunity you have in your new role is working inside an investment shop and being part of that investment committee, part of those decisions. So I see that as a great opportunity for what you can do, where you are now on that further journey. In terms of performance, there was a piece that I skipped over, which was I noticed a performance fee part of the Green Planet Fund, and I'm a big fan of aligning incentives. There's a place for a performance fee. How did that come about, or is that something you inherited, or what interest have you seen in performance fees around ESG investment strategies?
I think that's probably a legacy topic. We obviously take performance fees, but we also align, that's part of SFDR compliance as well, by the way, align performance achievements with remuneration. Variable remuneration, to be correct. I think that's why we need both. You need to obviously take certain amounts of fees in order to run your funds and costs related to this, but also in ultimately to improve and innovate and to build your teams to actually meet the needs for the future. So I think if and when how fees are relevant, if they are too high, if they are just appropriate, or if they're too low, is always in the eye of the beholder as well. But I think in order to run these type of funds and to run your business and your operating model, you ultimately need to have certain fees. Mm.
And anything you want to expand on around your teaching and this training piece, that seems to be an important part of what you do. I'm assuming that's where you're hiring new people out of, because you get to see them do your courses. Anything you want to expand on there?
Sure. Yes, I very much enjoyed the teaching experience because it gives me time to reflect, think, and innovate, as we said. Also because, this is a very interactive, a very complex, a very ever-growing field of information, data, concepts.
For me, it's like a laboratory experience. If it goes well, if you have the good students and the course goes well, it's like a laboratory.
It absolutely is, Graham. It's the lab experience when and where you can spend time on R&D, when and where you can fail, when and where you can mistakes, when and where you can learn of improving and to improve actually new concepts. I think you are less likely and maybe less open to fail in an industry environment. But if you're undertaking your own research and you're actually trialing different ways, of course, before you go into publication, but you are able to readjust the needle and you have the time for doing it. I think that's also the major difference many of us do not appreciate, but the ones that have worked in both fields. And there's, of course, always a lot to be said about salaries and about sort of influence and maybe about importance, whatever that might be. But I think it's so important not to lose sight of the fact that you have time for the things that matter. And I therefore always appreciate having the time, and also that my current company supports the time management for extracurricular activities. May they be in lecturing, may they be in book writing, may they be in other type of levels of contributing to groups and society. And the NGO effort with NSFM is one part of this. But I think it's absolutely fundamental that we need to have that time to personally evolve, develop, and exchange.
And last question, I'm an activist like you, and I'm asking my guests where possible, how do we get you, Martina, on the investment committee of your alma mater? I'm not sure, you were at school in Scotland and in Germany, right?
True, right. Yes.
So there's two academic institutions that you're affiliated with. You have, you proudly wear the logos, and they have some kind of endowment, one assumes, and so I'm trying to get everyone I interview to at least think about, like, hey, can we get you on the investing committee? Because some of my experience in academia, maybe you relate to this, is there's some very smart people, but when it comes to the basics of managing money or sitting through an investing committee or interrogating investment manager pitching you on some great idea, and some of the thinking around ESG is just completely absent, or it's misinformed, or it's 8 years old. So could we pitch you on getting to your alma mater investment committee?
Delighted to do that. Christine Chow, our dear friend as well, obviously did that at the LSE, and I think she had a great way of influencing decision-making and using all her skills and capabilities that she developed at Hermes at the time. So I think, yes, if and where there is an option, delighted to do so, even not necessarily only amongst my alma mater institutions, but others. And I think many of others should think ways and should think through ways of actually being part of this decision-making. So we're not only at the recipient's end, pension fund beneficiaries, but also ultimately at the end that drives these decisions and helps actually in shaping the endowments, funds, investment strategies of also academic institutions of the future. It's a McKibben 2.0.
Nice. What a wonderful way to end. I'm parched. I'm sure you are. I'm looking forward to getting some coffee, some decaf for you. Again, thank you so much for being a guest on the ESG and Coffee podcast.
Great pleasure, Graham.
Well, I hope you enjoyed that interview with Martina Mcpherson as much as I did. I re-listened to it while I was busy shoveling snow after the blizzard, and the shoveling just flew by like snowflakes as I listened to the detailed conversation and Martina's many insights. Here's 4 high points I took away from the interview. Firstly, the bigger picture. Martina's broad scope of work is well captured in our conversation. She speaks of the world as we know it, undergoing multiple complex transitions, and how we are facing a broad range of macro developments that are shaping the sustainable investment and finance landscape. The fact that Martina chose the EU's Sustainable Finance Action Plan and developments at the EU level as her 100 moments in ESG and investing is a signal both of her appreciation for the legal and regulatory frameworks that underpin all investment, but also for the work in Europe across legal jurisdictions that will have significant influence on that region's economy and so the world's. The shift from, quote, voluntary codes and disclosure of ESG information towards mandatory legal frameworks and reporting, unquote, that Martina has described elsewhere, is ongoing, and progress will be uneven. But it is also the most significant shift where the markets may finally start to price in all factors, including ESG factors, into prices, trading, and transactions. Her insights into the EU Commission developments is most helpful. Her firm's description of, quote, sustainable investment, unquote, is, quote, long-term value development thanks to the integration of environmental, social, and governance criteria and ethical norms, unquote. This interview covers some of this, but there were more layers and edges we did not get to cover. Second high point, intellectual adventurer. Martina would like to describe herself to her children as an eco-warrior. As I said in the interview, I hope Netflix comes calling for that project. Martina shows up. She clearly is attuned to the opportunities for artificial intelligence and natural language processing to crunch through the vast amounts of data that is very expensive for humans to complete, and perhaps with more fidelity to whatever search parameters are selected. Technology is a large part of investment and therefore of ESG. How much more will emerge? Martina can now say her paper is a top ranking by downloads and category on SSRN. Quote, Artificial Intelligence and the FinTech Technologies for ESG Data and Analysis. It's 5 pages long. It was posted on 25 February 2021. It does help that it's short. Yes, that'll help the downloads. With her co-authors, she argues that, quote, latest AI and FinTech-led developments and innovation-centered collaboration efforts between regulators, standard setters, assurance and innovation providers can provide a meaningful approach for ESG data complexity management, unquote. Have a look at it and let me know what you think. Third high point, finding the edges of where to move next. Something that has impressed me about Martina is her energy and curiosity to expand the practice of ESG and sustainable investment. I expected she would be at Moody's for a long time, given their global reach and systemically important role of indexes and ratings, but her move to ODDO has the hallmarks of any important space. How to shift the direction of small and medium-sized businesses. It is a perfect fit for the self-described universalist. ODDO BHF describes itself in its value proposition as a, quote, an independent Franco-German financial services group with a history stretching back over 170 years. It was created from the alliance of a French family-owned business built up by 5 generations of stockbrokers and a German bank specializing in Mittelstand companies, unquote. Mittelstand companies in Germany are those kind of medium-sized companies, often family-run, specialist companies. While much of investment land focuses on the mega-cap companies and or the meme stocks, here is an active manager with about 70 billion assets under management finding ways to upgrade how the analysts and portfolio managers make decisions. The alignment of a career with their passions is instructive, as is the employee ownership of the shop, something of a feature in our Season 1 The Originals guests. At ODDO BHF, quote, the group has a specific ownership structure at 65% capital held by the ODDO family and 25% by the employees, unquote. Like the Generation Investor Management HBS case I'm teaching in my new Harvard Extension School course, Making the Sustainable Investing Case, the buy-in of talent is a differentiator, perhaps never more so than during this great resignation season we're living through in the COVID-19 pandemic. And my fourth and final high point, upgrading the team, motivating colleagues, and opening doors to talent. One of the most compelling aspects of the interview is when Martina is speaking about colleagues in the industry of long standing, of newly minted ESG experts, quote unquote, and the degree of competence washing, and the urgency in shifting old mindsets of investment as usual. Martina's work on education and training is evident both in the outline for 2022 and beyond for ODDO that she shared in confidence with me, as well as her commitment to the industry reflected through the Network for Sustainable Financial Markets, of which she is a president. Follow the hashtag NSFMNextGen and consider applying to join the network. Quote, the Network for Sustainable Financial Markets is a non-for-profit community interest company headquartered in the UK with a global reach and focus on young professionals and students across sustainable finance, banking, and insurance, unquote. Martina's inclusive approach is a hallmark of many colleagues I've learned from and worked with in the field the past 2 decades. It also may not have escaped your attention that at least the gender balance is much better in this field than in other corners of investment land. So, as always, I hope you enjoyed the bonus tape, and I welcome your feedback. Please post a 5-star review if you enjoyed it, wherever you listen to it. If you didn't like it, get back to me at ESG Architect, and follow us on Twitter at ESG and Coffee for updates on the podcast. Thank you for listening.
We hope you enjoyed the interview with one of the originals in investing, strategy, and sustainability. Please subscribe on your favorite podcasting platform or on YouTube and leave a 5-star review. Bad reviews you can send to Graham Sinclair at ESG Architect. All the details are in the show notes. And for news of our next guests, follow us on Twitter or Instagram at ESG and Coffee. Do you know an impressive human we should absolutely interview on investment strategy and sustainability? Please let us know on Twitter at ESG and Coffee. Our producer is Kat Farquharson on Twitter at Kat Farquharson, and original music by Aaron Bonney on Twitter at Aaron Bonney Music. And of course, this podcast is for your enlightenment, not investment advice. Do your own research.
You have been listening to the ESG and Coffee Podcast on investing, strategy, and sustainability, hosted by Graham Sinclair.